Welcome back to Small Caps, ladies and gentlemen. My name is Kerry Stevenson, and once again, I have Truth Bomb Tony, known as Tony Locantro, from Alto Capital. Every couple of weeks, we get together, and I ask Tony the tough questions. Well, actually, not that tough, about the market, what's going on, and as you all know, he won the bet a little while ago about interest rates and the property market. Seems that Tony's quite good at picking these things. Tony, welcome back to Small Caps. Good to see you.
Always a pleasure, Kerry. And who'd want to win an interest rate bet in this environment? We've got rates at 2.6 next Tuesday. While some of us are getting schmozzled on champagne, the RBA is going to lift rates, and it's a case of 0.25 or 0.5%, and that's really upsetting markets. My worry is of a global property crash. Already parts of Canada are down over 20%. New Zealand's down over 20%. And we had the RBA, who said it was plausible we're not getting any rate rises to 2024, have come out and said falls up to 20%. So what has happened is we've had economic conditions that were starting to flail, and into COVID, and the world just went crazy on this debt binge, and multiple asset classes just went up, and new asset classes were created. And suddenly, it's like going out and getting drunk, and that 3 a.m. kebab, and it goes all over you, and you wake up with this thumping hangover, and that's the hangover we're faced with now, pretty much in Australia and globally. And sadly, Kerry, I don't see any way out of it until interest rates can beat down inflation. But inflation seems embedded for now. And it's, the RBA's target band was 2 to 3%. Well, we're well above that. So a cash rate towards 4% would mean mortgage rates around 7%, which is a disaster, because interest rates have normalized into the biggest property bubble of all time, mainly in the eastern states. So unfortunately, as I presented on my last course, it's an economic shitstorm coming, and you need to prepare for it, because no one will really get away with it.
When you say you can prepare for it, because that's the thing, Tony, things like this have happened before, maybe not exactly the same as what's going on now, but it has happened before, and those that are prepared can come out the other side potentially even better. So I guess what I'm asking you, do you see opportunities, or are you saying step back and just hold for the moment?
I see an opportunity for those who want to live near where they work. And I think that's exactly what you need. I go back when I was a police officer in Bondi. I could live 500 metres from my police station and the same distance from the beach. Admittedly, it was a $115,000 unit, but I could live there. I could live there. And, nurses, teachers, emergency services people need a place to live. And we've got this property situation with an absolute rental crisis that we've never seen before. So you're going to hear stories of families living in cars, couch surfing. So we've got rents through the roof. And one of the major stresses in Sydney in particular is rental stress. Yeah. So this is like being sandpapered to death, if there's such a thing. During the COVID crisis, we were able to borrow pretty much, it was almost free money. We could buy now, pay later for stuff that's just in the cupboard now that doesn't get much use. So we're going to pay for it. You can't have that sort of binge and not have some impact at the end. And this is what I've been worried about for some time, because we were simply tiptoeing through the tulips. Yep, interest rates, they're never going to start to normalise. Well, now they are, and we're indebted up to our eyeballs. So with opportunities, I think at the moment, savers are going to see a little bit more bank interest. Gold and silver, always my go-to. You'll see the silver price up over $20 on some nights. It is very volatile. Gold is around 1650. So there are alternatives, but really the used car market was an opportunity to sell your soccer mum SUV, Kerry. Actually, no, it was more on the Toyota Land Cruisers or RAV4s where you could actually sell your car at a profit. That's now dissipating. So the second-hand market is going to be flooded with European SUVs and skidoos and boats and all this crap really we don't need. Maybe people will start raiding pool rooms and actually take away the pool table. So we're just seeing a normalisation of interest rates, but I just hope it doesn't get to the average long-term rate of 6.5%, Kerry, because that means 9.5% mortgages, and that's terrible.
I think the RBA would probably step back a little bit because they can see how, I guess, not dangerous this is, but it is quite volatile, and I think they're being quite cautious, aren't they? Or do you see them saying, you know what, we just have to get rid of this inflation? I don't think they are going to be able to get rid of inflation, and inflation, I think, is also higher than people make it out to be at the moment. But you say 25 to 50 basis points next Tuesday. Do you think they could go harder than that?
Well, they have to, because they're getting left behind on interest rates, and they're going to sacrifice our dollar where you import more inflation. So they're snookered themselves by not only saying rates will be lower for longer, now they've got no choice but to lift, and they're getting back to some form of normalisation, which has always been interest rates are the tool to get rid of inflation, which is regarded as the cancer of the economy. So let's see the rate of the increase. Let's see how quickly the bank will pass these rate rises on. But,
fast.
Exactly. But how can an average family find an extra $30,000 after tax to pay their mortgage on an asset that's going to drop 30-40%? I mean, there's only so many OnlyFans slots for people to, what can you do? Can you go out and drive Uber, deliver pizzas? Second jobs, second careers means that people are going to have to try and work even harder now, and the quality of life's going to suffer. So unfortunately, we had it far too easy during the last 2 to 3 years, and we're going to pay for it. So a real economic and social struggle, and we still haven't yet really seen the impact of where you're going to see more social unrest. And we're seeing that already with a lot of protests demanding higher pay. So it's not exciting. It's an interesting time to be an economic observer. But unfortunately, what I've noted in my stocks is, especially the biotech index and biotech stocks, is when sentiment dries up, you can't get out of the things. You're going to see much lower prices. And once the key with selling any asset is, if you're going to panic, be the first one to panic.
That's a very good.
You can't. I'm watching perfectly fine companies. Well, let's imagine a company's the campfire. So they do their job. They set out what they raise cash. They use it responsibly. Shareholders are happy. They're sitting around the fire, having a drink, holding hands, playing acoustic songs. Then suddenly that crowd turns feral, and you've got a riot where the company's done absolutely nothing to justify that. But once you see negative sentiment, you'll start to see rumours about the company. It'll start to get shorted, some of them. It's quite hard to deal with. And unfortunately, families are going to deal with it on our most over-leveraged and emotional assets. So, look, there are going to be opportunities. And what I've learnt to do over 24 years is just stick to finding good small companies that become bigger ones. And at the moment, it sucks because some of my companies have been forced to raise equity at stupid cheap prices, but it's not the end of the world. And I get phone calls from people saying, well, wouldn't I wait for markets to stabilise? Well, markets will never stabilize. And if you're scared to go in now, I don't think you'll ever go in. And you've got a choice. Do we either all die in a nuclear war, or do markets continue? I'm going to back markets continuing.
And I guess you're right. And I wanted to come back to where we started, which was the property market and interest rates, and how that passes into the stock market. It's kind of like the tsunami just keeps moving across, doesn't it, as people get a little bit more concerned. And as you say, if they've got to find more money to pay the mortgage rates, they've got less money to put into other investments. So it kind of cascades along, doesn't it? Until it doesn't. So my question to you is, if it does become even more challenging in the market, how do the companies themselves survive a tsunami like that?
Well, for starters, they just do their job. And if you've got a good mining project which is going to make it to production, you take the steps to do it. Admittedly, you might have to raise money at a low level where there is more shareholder dilution. If you're a biotech company that's moving towards clinical trials and you have the money to do it, block out all the friggin' noise, because big pharma, if the drugs succeed, big pharma don't care about sentiment towards the indices or small cap stocks. They will come in and scoop it all up. So my other concern is low ball takeover offers as well. And I think they'll come. Most takeovers generally are ego events where someone will go in and pay way too much, but the low ball, they'll come. And I just tell all my companies just to keep on doing your job. I know it's hard to look at your share price. Many of them are hitting all-time lows at a time where the fundamentals have never been stronger. So last Friday actually was one of the worst days I've ever seen for my stable, where you had a small group of shareholders decide that today's the day to give up. And we saw a mini capitulation, mainly on low volumes. So again, market depths look very weak, and shareholders sadly give up because they think the company isn't good because sentiment is so low. And that normally spells opportunity. So if you still have me in 2 to 3 years, I'm sure we'll be going through the same things, because this small cap script doesn't change. We go through cycles. We'll go through bubbles. At the moment, you've got to look at where coal stocks have come from and where they are now. The EV thematic is still playing out, albeit with a lot of volatility. And finally, money might start to flow for real companies. And I was talking to a company last week that will remain nameless, and I said, well, it's a really shitty time to be a real company. And that means you're not getting the attention. You're not seeing your positive announcements recognised on the scoreboard. But I can assure viewers that will certainly change, and the market will continue. So really difficult and challenging times. And sadly, this is where those that were keen about small cap stocks will give up, and those on the sidelines will stay on the sidelines and miss out on some amazing opportunities that I'm seeing now.
Well, it's the psychology of the markets, isn't it, Tony? Because at the end of the day, people always tend to come in when everybody's excited and share prices are going up, and they come in, they buy high and they sell low when they get worried about things. But what you and I have said in the past, and we'll say it again, is if the fundamentals are still there, and let's take a biotech company, if they're still doing what they were doing before, what's changed? If you like the company because of what they're doing, just if the share price is going down, wouldn't you say, not back up the truck, but certainly there's an opportunity there if nothing has changed except sentiment in the market? And that has happened before. It'll happen again. It will turn again. But the question I have for you, how long do you think this will last?
There's no end to the volatility. At the moment, the Dow Jones and the S&P 500 are going through a relief rally, because when the whole world is bearish, you're not going to see a crash. So what will happen is the stocks will get smashed, then they'll start to recover. Then you'll get funds and larger money flow into the stocks, and that's your bull trap, because I still believe the trend is down and we need to have that correction in markets, because at the moment, small cap stocks are prone to index risk. And I'd rather have the index back at 25, 26,000. It can do it in a gentle way. And then these companies can start to thrive. Because when you see 1,000 night down on the Dow, there's already 10 sellers in a small cap stock, and it gets belted. And then shareholders get negative about the stock. And it's this loop because the Dow fell 1,000 instead of 600. So the psychology is a really hard part of the market. Yeah, humans are wired to buy high and sell low. And we're wired to pretty much get money, have some success, get delusions of grandeur, go out and waste money on cars, properties, boats, diamonds, escorts, and all of that. And then you suddenly realize that that was just a waste. So the human programming, if you can feel those emotions, Kerry, and not act on them, you're going to go well, because I feel it. And what I'm trying to do in my course, actually I've got one starting on Sunday, is teach people how I deal with psychology, how I deal with the massive wins in the market, and more importantly, how I deal when a share price drops 50, 60% on nothing. But then, I'll go through all my stable and I'll explain the risk reward and why it pays to stay in these companies, why you shouldn't be too focused on cash burn. Well, let's face it, a company that has employees and no revenue has to raise cash.
Yeah.
And people just seem worried about a placement. I always say that the fear of a capital raising is much worse than the actual event. But as I've seen with two recent capital raisings that I've helped out with, the share price goes back to that price, if not a little lower, because others out there think that the company's only worth that. So there lies just a massive opportunity now. And as I've said before, I liken this period to buying Sydney beachside property in the early 90s, because the upside in some of these companies is 400-500% plus off the low base. And I say to my clients, look, if you buy stock at 20, it goes to 22. It's at cruising altitude. You won't take action. If the fundamentals are great, it goes to 10. Buy more. And then if it goes to 40, you've got a four bagger from there and you can build your holding. So this year on the scoreboard will be one of my worst. I can't hide from that. It's mainly the market, but Jesus, Lord's name in vain. Sorry about that, Kerry. But this has been the best year of accumulation I can ever remember. And my clients are prolific non-sellers, and they've got no choice but to make money next year. Then I've got to deal with the psychology of not selling a 5 to 10 bagger, and So
just quietly, ladies and gentlemen, Tony and I had a chat. It's a while ago now, and I remember you saying to me, "Have you taken any profits?" And I went, "No, everything will be fine." And Tony's voice ringing in my ear as that stock price had quite a dramatic fall from grace. But you rightly say, take some profits along the way. No one did anything wrong by taking profits. But let me just go back a step. You mentioned you're doing a course on Sunday. Now, I want to know what's the rationale behind this course? Is it just because you find that there's a lot of people out there that have got no clue? I mean, why are you doing it? And who's it aimed at? I mean, I don't want to necessarily plug the course per se, but I'm curious as to why have you started it? And who's it directed at?
I think because I now feel that I've got the justification to do this from dealing in small cap stocks and dealing with well over 1,000 people for 24 years. And I think I can teach the psychology to people and to go through stocks and to risk reward them. And I've got a section where I'll tell some war stories.
Right.
And this means massive wins. And I'll talk about times in the market where, for me, the GFC was the worst time I've ever seen. Global markets were about to freeze up. You had September 11. We were in the office the day the NASDAQ died, and it was crickets, and you couldn't catch a bid. So this is unique because I don't hold back, and I've got a section where I come up with all the excuses I've heard from people to either not make money or go broke. But as my career is, I like to take baby steps in my career. It's a little bit quiet at the moment. I can do this course. I'm getting paid probably half what a family lawyer gets. So it's not a cash grab, but I think I've got as much knowledge as anyone to bring this to people. And it's more of a presentation. We have a bit of fun. I've got a new slideshow where Murdoch Creative has helped me out, so I'm starting to look more professional. But yeah, so
big shout out to Murdoch Creative, because they are very clever at what they do. And yeah, I've seen part of your presentation. Very good, Murdoch Creative.
Yeah, so that's awesome. So it'll run over 2 Sundays. Then on the 27th of November, we'll all get together for a debrief, and I'll start to provide a 2023 outlook. So this is a great opportunity because these stocks are at giveaway prices. But the key is, how do you pick out of the 20? And I think what I teach is you've got to have a Powerball stock. And I know most of Australia will be trying to win $160 million on Thursday. Yeah. But there are companies out there that will have a massive swing at finding a mine. And that's where you can I call them crunchy stocks. It changes the color of your day.
Actually, just speaking of that, I'm talking to you coming up towards the end of October. A bit of a shout out. There is the Noosa Mining Conference coming up. And I always say to people, there's nothing like going and meeting people face to face, especially company executives, and asking them the questions. Because sometimes, especially newer investors, feel like they're going to ask a dumb question. I always say there's no such thing as a dumb question. Go and talk to them. Big shout out to Des and Phil, who put on Noosa Mining. It's 9 to 11 November. I'm going up. You're not coming across, are you?
I looked at the logistics and it just doesn't work for me at the moment. But the beauty of these conferences is you can watch them online.
That's true. Yep.
Yeah, I've been going to these conferences for years, and I always pick up a gem. And I remember one year, Ian Murray from Gold Road was there, and I think at the time he was trading at about 4.7 cents.
Wow.
So you do, and there was a lot of other companies that have since multiplied. And these company directors and geologists, they're there to engage with shareholders, not to stand at the booth and do nothing. But in the good old days, you could take away your stress balls, minties, free pens. You could win some gold and silver. So they're not.
You win gold and silver at the gold conference. That we had a great time this year, giving away gold and silver.
Yeah, and I actually knew someone that won some gold, and it's a good incentive. And people need to go out and be social now. Stop charting and trading in a dark room where you've got multiple cigarettes burning and it's just a schmozzle. Get out and talk to these directors. And if you could read body language, they're not going to tell you anything illegal. They're not going to give you inside information, but why not try and read their body language, read their tone of voice? And again, that's something I've picked up over many years. And Noosa's probably one of the best conferences in the country.
Especially on. So is the gold conference.
I said one of. And don't they put a heap of money on the bar?
Yeah, they do. Yeah. Yep. So yes, not that I'm drinking any alcohol at the moment. I'm getting fit and healthy, Tony. So we'll see if Noosa breaks me on the alcohol front, but probably will. All right, so we're coming up. You and I will talk more towards as we go into, cannot believe it, Christmas is coming up and people are starting to talk about it. I said earlier, how long do you think that this will last? What do you think people should be doing to prepare right now? Sit and wait? Go all in? Be diversified? What does Tony Locantro think for those wonderful people out there that are listening to us today? What to do?
Go around and look for some bargains. Get involved now, because again, it's either nuclear war, we all die, or markets continue and these companies will multiply. Oh, that's a poem. So do that. What I've done in my household, my kids will get some shares as they always do, but I'm banning Christmas. I mean, stuff spending all that money
humbug
on it. I've got a total gift ban happening. What I do for my partner is I'll write her 3 to 4 poems a year, and she'll get I'll get a better reaction at a poem than buying her a pink diamond or Louis Vuitton. So keep it simple, and that's what, celebrate what you have. I don't know how you're going to go alcohol free, because next Tuesday, Melbourne Cup, it's my favourite day of the year. But for Christmas, I'll probably just go get some oysters and some seafood and not even worry about it, because it's going to be very tough times coming up. But with that, there's opportunities. And I always say, in 2 to 3 years' time, I'll be saying, look, when I could have bought that stock for 4.1 cents, when I could have bought as much as I wanted at 12.5 or 8.5, because they're the Ramiliuses, the Northern Stars of the future, and they're sitting there now at giveaway prices, not because the company's crap, it's because shareholder sentiment is negative, it's close to rock bottom, and once you get on this negative loop, it's hard to get out of it. So amazing opportunities, but geez, we're in for a bumpy ride on the economic and social front.
Thank you so much, Tony Locantro, as always, telling us the truth bomb, Tony. As Tony said, it is going to be volatile, but the opportunities are there. Be smart about it. Do your research. Talk to the people who are running these companies, and make sure that you, I guess, back the right horse with Melbourne Cup coming up next week. But the RBA will continue to raise rates. It will become a little bit challenging, but that's where opportunity lies. But for now, Tony Locantro from Alto Capital, thanks for joining me on Small Caps today.
Always a pleasure, Kerry, and I look forward to our next session.